Hey everybody, David Keyte here with Bend Relo with your market update. This first graph we have today is interest rates. As you can see, they've come back up from the lows in early August at 5%. We're up about closer to 5.5, a little over 5.5 right now. Definitely seeing some volatility, but we do have a pretty good range of 5 as the floor and 6 kind of as the upper bound. So we're watching that, but it's nice to have some stabilization in the last 3 months as opposed to steady increases, which we were seeing in the beginning of the year. Here's mortgage rate projections from the major players in the mortgage world, Freddie Mac, Fannie Mae. As you can see, this is for Q4. Their average projection is going down, so not a lot though. So people are expecting rates to come down soon. One of the things that we're hearing in the industry a lot is marry the house, date the interest rate, date the mortgage. Reason for this is you can always refi. So if you lock into a rate at 6% today, you can always, if it goes down to 5 or 4.5, just refinance out of it. This is a national level chart. We're seeing appreciation slowing. That's not the same as depreciation. These are annualized home price appreciation for each month of the year nationally. And wow, this is a lot, like 20% annualized appreciation. And now we're seeing closer to 15% in July. One of my favorite graphs is we just got this Beacon report, and there's tons of really good stuff and nuggets in here to look at to understand where we're at in the market. A lot of nuance that we're going to talk about right now. So my mouse is in January. We started the year at 683 median purchase price. We're now at 717. This is an increase on the year of 2020 of about 4.5%. So median purchase price is up 4.5%. However, at the highs, we were up closer to 15%. Now, 15% in 3 months is not healthy. It's not how real estate moves on a market that moves 5 to 10% a year. Historically, 15% in 3 months, not healthy. So seeing modest appreciation in Bend on the year. Then this median price per square foot is, we came in the year at $355 a square foot, and we're currently at $355 a square foot. So that price per square foot number is unchanged. And as you can see, the trend line is still intact here. We're still in an upward trend. So this is really an attractive price per square foot compared to $389 in February, March. Days on market. Days on market is 15 still. And for August, this is how long it takes a property to list and then go pending. 15 days. We're going to talk about why that's such an interesting number when we look at the MLS sheet. The average listing on the MLS has been on the market for 58 days. So why the discrepancy? We'll talk about that in a second. Here's the number of transactions happening in Bend. It ticked up to 189 this August. That's down about 20% from last August, where we were at 229. Months of supply. This is our inventory for sale. We peaked in July at 2.06 months of inventory. Inventory actually went down in August. So this is a bullish signal. The rate of increase has stopped. It's actually decreased. And we're going to talk about that, why we think some of these things are happening when we look at this slide. Okay, there's 393 single-family homes in Bend for sale. Of those 393, 243, over half, have done price reductions. Those average price reduction is 7.25%. Average days on market is 58 days, so median. So the discrepancy between the listings on the MLS that are sitting for 58 days and the fact that all the homes, almost 200 homes, closed with 15 days time on market is telling us that the stuff is trading that's priced right. It's trading quickly, 15 days. The stuff that's on this MLS is all overpriced. Not all. The stuff that's been on 58 days is overpriced. So the dynamic at play is that it's taken a long time for sellers to understand what's happening. And part of why we do these market updates is we want to educate the population on what's going on. The sellers who look at the comps for March and April, and they say, well, my house is nicer than that house, I want that price and more. They're not taking into account that the market was 10 to 15% higher in March. So when we're looking at comps, we have to take that number and reduce from that number, which is the opposite of what we've done for the last 2 to 3 years. In an upward market, you're adding 1% or 2% because the time that's gone by. Now we're subtracting from the comps. The quicker people can realize that, the better better success they're going to have listing their house, because there's a risk, there's an opportunity risk to overpricing. What I mean by that is, if you overprice and don't get it sold, you wait 2 months. Well, guess what the market's been doing the last 2 months? It goes down a couple percent. So it's actually 3% as the average monthly decline over the last 3 months. So if you spend 2 months overpriced, now the market's 6% lower. So understanding what the risk is in mispricing, I think, is the most critical part to having a successful relocation if you're selling and then buying. Bottom line, less inventory than last month. Homes priced correctly are selling in 15 days on average. There's great opportunities for buyers, much more pleasant shopping experience, although people aren't giving away houses. Super low ball offers are still being ignored, but there is some wiggle room and time to think about your purchase when you're shopping for a home right now. Sellers, the people who are pricing correctly, are having a lot of success, because then once they get it pending, they're able to go out and shop, and they're buying a much nicer house for much less than they would have been 3 months ago. So if you guys have any questions or would like to chat about the market or your situation, feel free to reach out to myself or another Bend Relo team member.